Crompton has been the stock in focus, and on the back of Q4 earnings, which saw the revenue growth lagging expectations, but on the flip side, margins have had a positive surprise, and that's presumably why the stock is doing what it is doing. Mahima Johnson to tell us both the bull and the bear case for this particular stock. Mahima.
Right. So, as you rightly mentioned, in terms of its Q4 performance, the overall revenue growth lagged expectation. The street was expecting a slightly better growth in terms of its revenue, but overall gross margins as well as EBIT margins came in as a surprise, which is why we're seeing the up moves in the stock today. In terms of the overall demand outlook, we've seen that new premium launches are being seeded now, and that will support the recovery in the demand that has been muted because of delayed summers as well as subdued sentiment has been impacted. Plus, overall, we'll also see discretionary spending going up, and we might see that also boosting demand going forward. In terms of margins, overall strong growth has been witnessed in terms of the margins, but in terms of the segmental performance, strong growth in pumps and pumps was seen, and Butterfly Gandhimati revenue rose 11% YOY. But in terms of fans as well as lighting, there was weakness there. There was weak growth in fans, and lighting segment also fell by around 2% in terms of its revenue. In terms of the margin picture, ECD margins have remained flat so far, which is almost 23% of the overall revenue, but the overall margins on a consolidated front did improve, and this was on the back of a better product mix. In terms of the overall picture where it comes to valuations plus growth, profit CAGR growth in the past 3 years has been around 26%, but valuations don't look cheap for this particular counter, because right now trailing 12 month it stands at 40 times, which will go to further 33 times in 2026, and overall in 2027 it's estimated to go at 28 times, but 28 times still not looking cheap in terms of where the company stands. Lastly, in terms of just a quick update in terms of its key updates, and before I go to that, in terms of how brokerages are penciling in, it's interesting because as per Bloomberg, there are around 36 buys for this counter, just 1 hold and 1 sell, and Jefferies has had the highest target with a target price of 485, whereas JP Morgan has maintained a neutral with a target price of 365 on this counter. And lastly, in terms of key updates, the company has announced its foray into solar rooftop, and it's also considering a 3.5 billion capex in the next 2 to 3 years in the greenfield facility. So this is the overall view as to how Q4 has panned out for Crompton and what the bull versus bear case looks like.
Well, a case on either side. Thank you so much, Mahima, for breaking that down for us. Also joining us on the show, Aditya Agarwala, Head of Research and Investments at Invest for EDU. We have Nirav Ashar, Head of Research at Latin Manharlal Securities. Nirav, let me come to you first with regard to a Crompton. 7.5% move today, but the upside that some of the analyst community is seeing, some members, very strong even from here, 35+% at least over the next 12 months is what some analysts are building into this counter. Warranted? Do you believe that the turnaround is visible? Because the last 3 to 4 years haven't been particularly enthusing for this one.
Well, good afternoon and thank you for the invite. Good afternoon. This stock has been a rank underperformer, and of course they have done this acquisition of Butterfly Gandhimati, and a lot of time has been spent in consolidating and trying to stabilize the acquisition, doing the integration process, etc. I think while the street may be quite optimistic about the potential outcomes, I think this is a very, very reputed brand. It enjoys a very strong goodwill. And this time around, we've seen performance just coming in from the pump segment, whereas I think fans should have performed much better. There were a lot of expectations from the lighting segment also, but the competitive intensity seems to be quite high at this point of time. So I think it's a slight disappointment, still not very convinced about the story. And the capex which has been lined up, 3.5 billion, I think it's on the lower side. I think something more could have been desired as far as the capex is concerned. And as you rightly pointed out, the stock is looking expensive. It trades at 40 times, going forward 33 and 28 times. So it's not cheap in terms of valuation. So I think slightly disappointed with the result and believe that this stock is likely to be a slow and a sluggish mover.
Okay. Aditya, are you more bullish with regard to this one?
Harsh, good afternoon. Thanks for
Good
the
afternoon.
show. Yes, looking by the going purely by the chart setup and the kind of volume that you're witnessing in the stock, I'm more constructive on the stock. I think give it some time and stock will see levels of 390 to about 420 on the upside. These are the kind of levels that I'm looking at. Just to give you a small bit of advice, piece of something that I've noticed on the graph is look at the volume that we are witnessing in the stock today. The last time I see this kind of a volume was sometime in May 2024. And from there on, stock had witnessed at least a 25 to 30% upside in Crompton Greaves. So I'm not saying that something similar can be seen in the stock, but just purely going by the chart setup and the kind of volume that we're witnessing in trade today, I wouldn't want to write this off, this move completely, and would want to play this trade. If you already have the stock, continue to hold. If you're looking for a fresh entry, you can also get into the stock at current levels, place the stop somewhere around 340 odd levels, and look for a target of at least 390 to 420 on the upside. That's my take on Crompton.
Okay. Aditya, thanks for joining in. Any